Hello and welcome to my YouTube channel. Hope you all fun. So in today's video I'm going to discuss about the business lines of credit, one of the best type of loan. A business line of credit is a type of financing that lets you borrow money on an as needed basis and pay interest on only what you borrow. In some ways it works like a credit. The issuing bank approves you for a credit limit, and as you use and repay the money you owe, you can access that same credit line again throughout the draw period. However, eventually the draw period may expire, often after 12 to 24 months, and you will no longer be able to access the credit line when that happens. At that point, the repayment period begins, which can last up to 5 years. Advantages and disadvantages of business lines of credit. Business of credit can be flexible way to borrow money if you need an open source of funding. They can also work well for projects with undermined cost. However, getting a business line of credit with the best borrowing term usually requires good credit and sometimes collateral. You might also have to sign a personal guarantee, typically with unsecured credit line. Additionally, interest fees paid typically kick in the right way when you withdraw funds with no grace period. Like credit card offers. Microloans. Microloans are a financing option that features small loan amounts and short payments term. Interest rates tend to be low or non-existent in some cases, and the qualification criteria are often less stringent compared with other businesses loans. Eligible business may be able to borrow up to $50,000, typically from non-profit organization. Most micro lenders focus on under served small business owners such as women and minorities. Advantages and disadvantages of microloans. Microloans can provide underserved small business owner with an infusion of cash to get a startup off the ground or to help an existing business grow. However, microlenders may ask for a personal guarantee and collateral in order to secure funding. Invoice factoring. If your business provides a product or service to other businesses and uses invoices to collect payment, it might be eligible for invoice factoring. With this type of financing, your business sells its outstanding B2B invoices to a third party. The factoring company buying your invoices might advance 70% to 95% of their total value upfront. From there, the company collects the outstanding payments from your customers, deducts a factor fee 0.5% to 5% per month per outstanding invoice, and returns the difference to you. There are two types of invoice factoring: resources and non-resources. Recourse and non-recourse factors. Recourse factoring agreements can leave your business on the hook to buy back unpaid invoices. Non-recourse factoring agreements have the factoring company accept liability for an invoices that are not paid. Advantages and disadvantages of invoice factoring. Invoice factoring can help your business access cash on outstanding invoices before they are due. Qualifying for this type of financing is often easier than qualifying for other types of business loan. However, the factoring company may review the credit of your customer during the application process to make sure those businesses are likely to pay as agreed. This fast cash flow solution can also be expensive, especially if your customers pay late often. Invoice financing. Invoice financing works a lot like invoice factoring, yet with this business funding option you don't sell outstanding invoice to a third party. Instead, you invoice serve as collateral to help you secure a cash advance, often up to at least 80% of the value of your outstanding